from the children of planet Earth.
What's up, everybody? Good morning. All right, looking at the overnights, we're sitting flat across the market. Didn't really do much. Up and down 10 points, sitting in between DD bands. Market's nice and stable today. Nothing crazy. We need that important monthly map for this week. Friday showed that there was going to be likely bull side support going into expiration Friday for the month. We'll see if this monthly map closed out last week with that same inclination.
Hello from the children of planet Earth. Hello from the children of planet
COT is always showing week old data. It updates once a week. Today's gonna be a pretty short stream. I have a podcast I'm gonna be on at 11 o'clock Eastern, so I'm gonna be on here just for about an hour or under an hour on the stream, and then I'll direct you guys to the podcast. Hit that like button, everybody. Smash, smash, smash. Let's go, let's go. You have to hit it. Get our ratio, you know how that goes. Interesting. I'm not really sure. Maybe look on the CME site. Try looking at different, but maybe bar chart hasn't updated theirs if you're using it. Should monthly maps be visible before market open? They should be, but they only calculate last week's monthly map. I mean, last Friday's monthly map. The new monthly maps need to be recalculated at 9:30. Julia Cordova, if you know who she is. All right, let's see what we got. Okay, market gapping down, gapping down. Let's look out the door. Resilience is looking pretty solid. Okay. Get those liquidity maps come through. All right, so far, if resilience is positive, pushing through the box is a good trade. Let's see. Oh yeah, that's pretty strong. I don't want to put like notifications, rejection, notifications only. Okay. Okay. All right. All right. Resilience. Hopefully this is one of those. Resilience is positive. We would push through here. Resilience can apply hedge trade, but again, mean reversion, not anything good. So I'm going to take a quick long on this one. Now, again, if resilience keeps pushing past like 30, 40, then I'm going to be okay. Resilience can apply hedge pressure break. We talk about that a lot. The desire to fill the gap can break through hedge pressure. Now open in bear zone. Limited upside 446 today if we get it. Not the best. Mean reversion on Q is not the best either. Dude. All right. Multi-map. Fingers crossed. Let's see if we get anything good. All right. Okay, let's see if it's not coming through yet. It's probably waiting on the calculation. Status. We're still waiting for some more. All right, this morning, futures should be launched to everybody in the community now. So if you open up your platform, you should be able to see your connection tab should have the Edge Clear connection. Hold on 1 second. All right, why is this? Come on, these multi-maps show up. Just waiting for the calculations to be done. You couldn't get any monthly maps this morning? It says me upgraded something. Hold on. Let's see. It's asking you to upgrade to Pro Plus. You already am. Okay, hold on. Before you do anything, hold on. Let me look at something real quick. It's asking you to upgrade to Pro Plus and you already are. It means it doesn't recognize that you're Pro Plus. Send me a message in Discord and let me know what your email is you signed up with, and I'll double check it. All right, so just analyzing the morning, we're still trading a little bit lower off of that high DD band tap on NASDAQ. The rest of the market's still sitting pretty stable. The DD ratio came in at 90% still. We're still showing that bullishness in the market. So I don't... Right now I'm trying to see what's going on. Monthly map's not showing up for some reason. She got UVXY. Yeah, no, we're investigating what's going on with that. UVXY bear zone, which is good. Any interaction with 17 could be volatility induced in the market. So I think we're still pretty okay as long as resilience keeps climbing, but it's not getting a lot of steam past 10. So I'm not liking it. There it is. Let me try. My platform keeps freezing. We pushed a new release last night. We could have a little bit of a... We're looking into it. Okay, market looks pretty decent, but this resilience not pushing past 0. I'm not liking it. Let me reboot my platform here. Oh, there it goes. All right, having them look into this just to make sure everything's showing up pretty good. Yeah, it's a pretty choppy day. I want to see that monthly map. That's all I care about right now, to see what the overall week is looking like. So they're looking into it. It's something probably could have broken on the release. Let me look you up, Michael, see what's going on. How you guys doing today? Had a long night with this new release. Right now, everybody, futures should be available to you in your connections tab. All right. And let me run it by it. It still thinks you're pro, Michael. Let me make sure he. All right, things are looking pretty solid here. Can't wait for monthly maps to pop, dude. That's all I care about today. I want to see how we finish for the week. That's the most important thing. I'm in the boat that if the monthly maps come in looking like they did on Friday, everybody, if you don't mind smashing that like button real quick. If you're first day here in Rocket Scooter, we're going to be doing quick analysis on the market. So bear short up, right? We're going to look at this. We're going to use our cheat sheets. Let me pull them on the screen really quick. Let's start over resilience. Resilience being positive. Let's look at the resilience bullish. Okay. If you're inside the box, resilience pushes to the top of the box. If you're below the box, it tries to fill the gap this way. We were below the box. It's going to likely try to fill the gap this way with the resilience being positive enough. So that is enough to stimulate the market by creating a hedge pressure break to the upside. Just keep that in mind. We have a video called Resilience Can Predict Hedge Pressure Breaks, which is that resilience supersedes that. And the idea that resilience is going to fill the gap, can break hedge pressure and kick this market irrational. That's what I'm expecting to happen likely today with the liquidity map being bear short up, breaking hedge pressure goes to next resistance, which is also there. I expect hedge pressure to be resistance in a BRSU as we see on liquidity maps. So breaking through is like the 11% chance on the S&P. So I'm not really, if resilience can forecast it's going to break through, then we're in that mean reversion state. With the DD ratio still being 90, there's still stocks stuck in bull territory. It's keeping this market from crashing. Opening in bear zone, which is what we did. Tapping bull zone is the highest part of the day. So my trade plan is anticipating something like this. Now, if it, the 96% of the chance is that this comes back down in here, but on a hedge pressure break scenario, we don't utilize that it opens in the same place that it closes kind of rule. Under irrational conditions, we don't deal with that. So if there was no hedge pressure break in the way, tapping bull zone could come back to bear zone, and I would trade that way. With hedge pressure break, I'm not taking any analysis from there. This is only if rational, we look for those kind of relationships. Cool. Everything's looking solid. NASDAQ, in a similar sense, this is exactly the trade I talk about. The S&P is what happened in NASDAQ. Resilience forecast, hedge pressure break. We break through hedge pressure and fill the box. That's what I'm looking for on the S&P as well. I like it. Oh, let me try this really quick. There's hotkeys. Oh, cool. Okay. Trying to figure out. How to get the monthly maps up here. They're looking at it today. investigate the DD bands one more time. We're currently in a project of the DD bands portion of things automated, so I'm excited to finally have that going. I can't get it. So we did tap the upper band, so already it's kind of like in a yellow irrational state today, which means the market's already kind of completed that upward journey. I'm looking for kind of like a choppy market from here. So I'm not going to be trading a lot anyways, and the Russell trading down, I really don't like that the way that I see that. And VIX trading up. We want to see this decay out until monthly expiration. That's kind of the hope that I'm hoping we get. Yeah, the market's still going to be trying to sell. I'm trying. All I need is the map so I can see what's going on for the month. So waiting for that. Very thin today. Just pop on one chart here. All right, so I'm going to put everything on one chart here. I think the all right. We pushed a new release live last night that takes futures to the child charts as well. This could be what's causing the slowdown in the platform. So it's something we're going to investigate today. Okay, Pro Plus peeps. If you have Pro Plus, you should be able to see in your connections tab your futures connection. So let me try something really quick. I'm going to try to get mine loaded up. So a couple of little glitches this morning since the release came out. So let me try. I'm gonna try one more thing over here. Try to jolt it, get it up in here. Okay, I'm gonna try one more thing. Let's see if this cleans it up. All right. If any of you guys are experiencing freezes this morning, it's not just you. Something's going on. So we're looking into it. In the meantime, those of you with futures, you're going to connect right here. And go through the steps. You see the connections tab. Click the plus button to add it if you don't already have it. Yeah, I apologize for the inconvenience today. We'll be investigating that. That should be looked into shortly. My presumption is that monthly maps still show bullishness for the expiration week, and that we do revert to mean or trade up in expiration. That's what I hope to see. Okay. Okay. I got to print out the monthly map from the local host, from our local run machine. Hold on, make sure there's nothing proprietary here. Hold up. All right. Here it is. So we're looking into it. It still has that same look, which is good. It still has that same bullish crawl until Friday expiration, which is good. Okay, good. Everybody, take a screenshot of that really quick if you want to see. QQQ is very similar to last Friday. All right, let me save this somewhere. So bull side going deeper, bear side getting weaker. It's going to show likely volatility for a day or two and then push up until expiration, hopefully for now. So it does look like we'll hopefully be reverting to mean in expiration. Hopefully more than crashing out. Yeah, my chart's definitely frozen. I keep having to refresh it. I think the new release, it looks like to be like maybe a memory issue. We're gonna have to look into this. The new release is locking up the platform when I try to do a lot of stuff. All right. Okay, so today we're waiting to watch this resilience number, if it's going to push positive or negative, to see if we continue to push to fill the gap this way. I'm going to leave it on SPY for now, while we're waiting for everything else to... They have bull and bear on the color correctly? Yes, they have their own color scheme. There's no correct. I mean, you can set it to whatever you want. His bull side is got a red border. His bear side has a green border. Still looking solid into Friday's expiration. All right. Good deal. Now we sit and wait. How was y'all's weekend? Did you do anything fun at all? Any of you guys? So the goal today to look for this, the setup here is that resilience can forecast a hedge pressure break if resilience is bullish enough. I'm going to say res is greater than 10 because we're in an irrational state already. We need a little bit of fat. So this number, resilience, needs to climb to show that there's going to be potential to fill the gap. Now, the only thing that's going to mechanize this is probably a short squeeze and expiration. Squeezing some options out and us pinning that 4,500 level. That's kind of what the S&P's been trying to shoot for monthly. So we'll see if we, don't react to that today. DD ratio. The DD rule. What's up? What's up, cryogenics? I'm looking to see us tap 446 today. I'm hoping to see it. Res less than 0. Res less than 10. So maybe some scalping up through here. I think the way the market's been decaying volatility is killing premiums that puts are likely not to pay out in the monthly expiration. Clearly, the market has been getting enough squeezing shorts on the way down that the market just hasn't collapsed on itself just yet. But I did talk with some friends over the weekend about their perception of things. And a lot of people, including myself, think that we actually did hit the top for the quarter. I'm gonna tell you, as we saw the monthly maps disintegrate on that credit rating downgrade, my shouting from the rooftops bull case died immediately. The monthly maps in June implied a rally till October. When that thing happened, the monthly maps, it looks like you threw a rock into a window. You saw it just shattered. There was a solid bull zone going all through October. Right? And it's just gone. So what we do have developing over the last week was a bull zone for this next week. So we see this right here, this bull zone getting deeper in expiration where my mouse is on the red. We actually have that slight potential. Price moves and price moves up when bull zone gets deeper. So we're seeing that this week likely can revert to mean before we start selling. Like I said, my desire to be bullish to the fall is gone. As soon as that event happened, monthly map shattered, I changed my stance. I said, this is probably the top now for the quarter. We lost all of that. Right? All that potential just died on that catalyst. So that's how important it is every single day to monitor how sentiment reflects on the market. Clearly, the catalyst of credit rating downgrade and realize what issues are happening in the bond market, and then Wall Street got a little scared. The tech bubble immediately just stopped inflating and started deflating a little bit. A lot of profit taking. Now, take note, past expiration, we aren't necessarily in a bear zone either. We're not necessarily in a bull zone either. You know what the algorithm is going to call that? Mean reversion. Just to kind of show on my screen. From here to here, you consider us being deeper in bull territory as the week goes. And then from here forward, you've got bear zones below you and nothing above you. The algorithm would consider that mean reversion. If you had a liquidity map with the same thing, if you're above a bear zone with nothing above it, it's considered mean reversion. So what that actually means is that the market, after expiration, as of right now, is non-directional. It's impossible to determine. So the problem is beyond the 18th, but there's no bull side. So we can't gauge volatility. We can't gauge what it's going to be. We just know it's going to be choppy and weird. So it shows that there's like this iron wall at expiration. And as soon as we pass the 18th, the next Monday is going to be super important to really get a grasp on what the market's doing. So right now, I think this is telling me everybody in Wall Street's waiting to see how monthly pans out before they make any decisions. As of now, trading way upside, trading way inside of this non-bull, non-bear environment. Could just mean a choppy, stable market that's slightly more volatile than average, because generally speaking, the distance to the bear zone gets a little deeper from the average price, but still we don't have any gauge for where the bull zone is to really see the volatility. So it's hard to say. The market could revert to mean here and then start chopping around and stabilizing. And until these bear zones start creeping up to price and higher, then I'll start being bearish on the market again. So if I were to take a guess that we revert to mean maybe we could double top this in expiration, we'll see. And then if the monthly maps come out not being bullish, then the market's going to find its way to be volatile and likely correct. But trade its way down. It's going to not crash, I don't think. I don't see it yet. But I do think until and again, this is going to be contingent on what we get after expiration. Resistance from previous day's closes. Looks like the close from 8-9, 8-10 land right between Friday's close and the bull zone. I don't use the previous day's opening or closing if it's already closed. Only those that are open gaps still that haven't been filled. If it's been filled, then typically you can assume that the market's found some balance already. So like if Tuesday gap down and Wednesday filled that gap and traded up, and then Thursday traded back down to hit Tuesday's close, it could be resistance, there could be volume, but it's very arbitrary, because the only reason there's going to be resistance is if there's buyers there, and if the imbalance wasn't fully satisfied. And it's a little random, I think. I mean, it's not a terrible idea, but I only use ones that I know haven't been filled, because I can know for a fact there's still a big imbalance there. So if the gap's already been filled from the previous day's close, I tend to ignore it as a repeatable choice, although sometimes it will create activity. Okay, so here's fingers crossed. Do we rally into expiration? The SPY looks okay. Now, the NASDAQ monthly map doesn't look as sexy. It looks, let me see if I can't open it. It looks like bull zone is getting weaker, bear zone is getting weaker. So NASDAQ is going to be volatile. So without that power from heavy tech, we're not getting the market just steamroll rallying, but we are getting things looking good over the weekend. I was actually analyzing that financials, utility, energy, all of those things look good. So the S&P could be getting some love from the other sectors. Let me see what the XLE is doing. Still holding that monthly hedge pressure. That's good. Financials are looking good as well over the long haul. The monthly maps on them are looking good. Let's see if that doesn't freeze up today. Do we get monthly maps? Okay, cool. That's there. That's there. Okay, so like energy is looking very sexy on monthly maps. So monthly maps looks like there was only having problems with SPY then. Yeah, weird. So energy still maintaining that bull support, that bear weakening, which is good. So some of the other sectors I think are going to be what's going to keep the market afloat. People are actually rolling into some other things, which is actually pretty good. So we have today. How's the market doing? Oh, I'm pushing higher. Good deal. Resilience above 10. That's my initial thought. I am long right now. Consumer inflation expectations in 50 minutes. Not gonna be a big change. What was I trying to look for? Yeah, I'd like to see a new commitment traders update. That'd be good. Ralph, just rewind to the beginning of the stream. I'm not going to repeat it. If you're not here when I do the trade and I'm in the trade, just rewind to the beginning of the stream in like the first 5 minutes. And you guys can always do that. I have replay on. Just go back and revisit. It was based on resilience. Resilience was like 60 at the open. Yeah, we're trying to see What was it looking for? I was looking for something. My brain just blanked. Hold on. What was I looking for? Oh, the sectors. This is what I was trying to look for. Healthcare, technology. That's today. Okay. So there is some rotating. It's interesting to see tech actually pushing higher today. That's cool to see. Let me see what the XLK looks like on the monthly map. Is the XLK actually healing itself? Getting some strength in tech and exploration could be kind of nice. No. Just volatile. Okay. What do you mean? What has changed? That it's still the same thing. I said resilience breaks hedge pressure. I drew everything on the screen. I do the same thing every morning. The first 10 minutes, I have a trade usually, and I'm explaining what the trade is. I literally drew exactly this on the stream. Just rewind and rewatch it. Looks like we hit that upper limit. That is my target for today. I like what I'm seeing. Nothing changed. It was the same. All right, 350 bucks. Let me flatten that. Actually, let me see if I can hold on to that a little bit. Let me look at this. Up to 400 bucks on that. I'll just take that as profit. Okay, cool. Cool deal. Nice little scalp. Is that the sector spiders? Yeah, that's the sector spiders torch. Nice little scalp. That's pretty easy. What was it? $400 win. Like I said, just take the scalp. That makes sense. Resilience can predict hedge pressure break. I'll draw it again if you don't want to go rewind. Anytime you are trading inside the box, you will close the box with reds greater than 10. This is resilience 101. It's such an easy indicator to look for, right? Resilience implies hedge pressure will break because resilience outranks hedge pressure in our ranking. So we look at them in this order. DD's bullish. Okay, so the DD rule, there, resist. That's DD. Okay. That supersedes resilience. Resilience being bullish fills the gap this way. So this is bull. This is bull. Liquidity map was a bear play, and I bet that resilience would break hedge pressure to the upside. Yeah, like I'm an announcer describing the actions that happens to the game. I kind of like, if you want to review something I did, just rewind it. I mean, the first 10 minutes is usually gonna rationalize stuff. Even though I said it's choppy and I didn't like it, I didn't lose a lot of faith in it because resilience was just hugging zero, and I was just saying I hope that it gets some steam, and it did. So we fill the gap, touch the box, I close out the position. Not bad, right? Nothing too crazy, like 15 points a run, pretty easy. Liquidity map was a bear short up at the time, which implied resistance there. Oops, sorry. Right, liquidity map implied resistance there. Liquidity map, open, blue, open. So at the interface, I make a judgment call. Do I want to short or do I? So remember the stats, right? 89% of the time on the S&P, when it's rational, we don't break hedge pressure. 11% of the time we do. So 1 out of 10 days, I can take a bet that we break hedge pressure on the S&P. And if I have justifying evidence, these two are both very bullish, or bullish enough that we A, fill the gap, B, tap the upper bull zone, then I'll take the bet on the long side when we break through hedge. My initial trade started right here when I saw resilience was 60 and we're at the bottom of the box, and it pressed through here trying to break hedge. It dipped some more. I added like 2 more contracts in case you didn't see that. And then I just held on, and then I closed. I mean, this is textbook opening trade. Very easy. This is like all textbook. This one was one of the easier it is. I don't understand what you're trying to ask me, Ralph. You want to see why you're asking what changed? Nothing changed. I literally jumped in the position within 3 minutes of market open and just held on. I am describing the actions that happens, but we're not doing instant replays. Like I just did the instant replay for you guys to see. And so I'm going to say, if you want to see what I do, go back and rewind the stream to the point I make an entry, and rewatch the first 5 minutes or 10 minutes. Usually I'll describe what I'm doing. I can always turn replay off if y'all don't want to use it. I'm right now trying to troubleshoot what's going on with monthly maps, so hang tight. I don't want to think of myself as a sports announcer. I want to think of myself as a trading platform developer. I got shit to do over here to help fix things in the platform. That's my real job, right? Not a sports announcer. I have to troubleshoot the platform right now. So if I'm kind of back and forth, I'm also on a podcast. I do a lot in the mornings. But I have to go troubleshoot the platform. You got to work with me a little bit. YouTube is a free courtesy. It's not a job, doesn't pay anything. I do it so y'all can watch me trade. If you're not here or you can't pay attention, then the replay solves your problem. See, everybody wins. What's up? What's up, Colin? First day with the roster team. A lot to learn, but using my older school signals was also long MES there. Very excited to add RS tools to your list. Thanks, man. Glad to see you finally signed up, dude. I know we were talking for a while on Twitter, remember? Yeah, like honestly, I wish I was like what do they call them? Influencers, those influencer streamers with like affiliate links under my bio, and all I do is stream paper trading all day long from a trader funding program and yell and scream in the microphone, and I can just basically YouTube for a living. But I'm YouTuber is not my job. I do this so people can see the platform and see me use it, but yeah, we'll do trade recaps like after 2. This is more like in the morning. We're here to troubleshoot issues, communicate with you guys. You know, somebody says, hey, monthly maps aren't working. I'm kind of on that. But what I think would be cool is that if y'all notice that I'm doing live trades, I'm currently on Spaces and Twitter. I'm currently troubleshooting down problems from monthly maps. I'm doing like 4 getting Pro Plus people in the futures, like doing like 4 or 5 things and still making trades and still fucking making bank. Well, I do it. It's only every single week I get an extra 2 gray hairs in my beard from all the work I do. Y'all like the replay? Okay. There'll be a point where the stream's gonna change format, where I'm actually doing a lot more. Like we can pause on a lot of these big projects and just kind of coast. That'll be like later this year, early next year. Like I said, I wish I could just focus on just doing YouTube all day. That'd be kind of fun. Unfortunately, I only get like an hour. 2 hours and a half every day. So when we do a Rocket Scooter, what I do is typically a 1 trade philosophy. I do 1 trade in the morning. I get my trade and call in the day. I usually don't do multiple trades. I use resilience, liquidity map, and DD. It's the same thing every day to make an opening call. The DD ratio being greater than half, I expect the market to still not be super bearish. Monthly maps not opening in bear zone, I expect the market to not be super bearish. Opening above monthly hedge pressure, I expect the market to receive positive gamma going into monthly expiration, which means there's just an invisible floating pressure that's going to keep squeezing shorts, which is what we're seeing. So I have my sentiment. Okay, things are not so bearish. Things are slightly still okay. I haven't done any shorting at all this week. Last week either. I'm just waiting for dips to buy, things to stabilize, and I do think we rally into monthly expiration. And then I think from there, I'm going to shift my mentality to possibly shorting the market if the next month we start challenging monthly hedge pressure and breaking it. So I'll be back. I'll be a full-on bear when we're below monthly hedge pressure for sure. I use right out the door resilience prints first. It's the easiest one to see, and I usually give it a minute or two to stabilize. If it's opening around 0, if it opens like at 50 or 60 or 70, then I jump in really quick and then I wait. If it dips below -10, if irrational like we see now, then I start to kind of be a little worried. We watched it all morning. It never really dipped below -10. It kind of just floated the whole time. Like, you know, -6, -5. It kind of hung in there for a couple of ticks. It dropped pretty quick. But it stabilized. I held on there. I had a 1-point stop at 444. I was going to hold on to my stop in case I lost it. To go to here is a 1.5 to 1 trade. Everything added up is pretty good. So I like that. Rocket Scooter has been the best trading platform course you've gone through so far. Rowan, thank you. So much detail in those videos. Appreciate all the hard work, Matt. Well, I appreciate you guys. You know, I love all of y'all. Love you too, Ralph. Trust me, I wish I had fucking 8 copies of myself, like the Michael Keaton movie. Remember that one from the 80s? Each one of them doing a different task around the house. You get bored of it, brother. Too intelligent to sit in here all day to cater to folks that aren't willing to do the work. I see YouTubers, especially trading YouTubers and other trading related influencers, their job is like, it's like Twitch streaming. It's like watching people play Apex Legends on Twitch. They're just jumping and up and down, screaming, talking shit. It's like streaming video games, but with trading. I don't feel like watching trading streaming does anything other than just apply background noise while you trade. Very, very few of them, if any of them, are actually good at trading, number one. Number two is they're not stopping and teaching and providing like educational system while it's live. Like, here's the trades live and here's why I did it. It's more just like, you know, basic knowledge or basic TA. I don't know any of them that really like teach, but they're all good and entertaining. And I'm friends with all the streamers. I'm not talking smack about my boys and girls out there who do it. But a lot of them are just doing the streaming game, which is to draw views and, you know, be loud and be fun and be, I'm the boring one. I'm teaching. Nobody wants to learn anything. Boring. Do you have one such a new question? Currently cranking through all the training content. Obviously a lot, but that's exciting. If you were learning these tools today for the first time, how would you approach it? Stick with the outline. It might seem kind of boring to go that direction, but it's risk management first. It teaches you the irrational rules first. It's a very important part of it. You may feel like it's kind of like the Karate Kid, right? Or Mr. Miyagi's telling you, okay, I need you to paint the fence and stand on the floor. And you're like learning a little bit of theory. You're learning a little bit of stuff, irrational. None of it's telling you where to enter, where to exit. None of it mentions hedge pressure. You know, none of it mentions resilience. None of it yet. It's like, what are these other things? It's focusing on the qualifiers first, your confidence. The first thing you want to instill in people is understanding when markets are stable and confident. Why did I not do 20 micros today or 5 minis? Why did I just do like 6 micros or something small? Because of those irrational rules, right? And those are the first things you learn. And just go in order, 1 through 7. The first thing you learn is irrational rules. DD band tap already has what we call a yellow light on that particular rule. If you go to the cheat sheets, you'll see that once you touch DD band in here, once you touch it, it's yellow for the rest of the day. Yellow means trade half my normal position. Trade really small, or trade small. So when it's fulfilled, let me go here. When it's fulfilled on, let me show you. On the cheat sheet, anytime you already touch DD band in any of the 3 indices, it's a pseudo, it's caution, we call it. It's a yellow light. When the DD band rules come on here, it's yellow. When any of the indices are yellow, I treat all of them like they're yellow. If any of them are red, I treat all of them like they're red. So clearly today there's red. Any trades from here on out is like really, really small. Something like a 10 or 20% of what I normally do, so that I have room to maneuver and cost basis average. So example is We trade through hedge pressure and I jump in on the long because I'm like, okay, I get in late, I jump in on the long and it goes against me. Well, I only put 2 contracts down instead of 20, right? 10%. That way I can throw more in down here and build a cost basis where I want to, knowing that irrational means unusual volatility, which means I'm expecting the market to chop around. So don't go all in on your first trade. Let it chop around and use that choppiness to your advantage. That's what the irrational rules teach you. And so that first module is all 5 of the irrational rules. There's 2 in equities, 3 in futures, and they're pretty easy to learn. And each one of them comes with a cheat sheet. Green is trade my normal position. Red is trade 10%, 20%, or sit out if you're new trying to learn it. Get comfortable sitting out. Like normally, anytime we break a DD band and we're outside the band, I don't usually like to trade. Anytime a catalyst is active, I don't like to trade either. I actually sit out on these. So these are the 5 cheat sheets. You're going to learn this automatically out the door. It's how to predict unusual volume activity and unusual behavior right out the door. Then you're going to get to the big 3, which is entries. You're going to learn DD ratio, resilience, and liquidity map. This is how to get into the trade and directional bias for the day. And then exits are going to teach you how to formulate exit targets. Opposing wall is always an exit target. Opening a bear zone, hit the bull zone, I'm always out, right? So normally, like, what sucks is that the way that would make sales better would be for me to immediately teach you how hedge pressure or resilience is the best trading indicator invented on the planet and show you some mind-blowing moments with it. Like look, check out this new baseball bat. Hear me hitting a grand slam, but here I am starting off slow and I introduce the stuff that drops your jaw in module 2. Because it's important to me that you use it correctly. People hear some of our team and our affiliates and our advertisers talking about hedge pressure all day long, and then they go in like, oh, I'm gonna check out hedge pressure. They buy the platform, they see hedge pressure. I don't want them seeing it and being like, oh, this guy on Spaces is talking about it. Let me full port YOLO along here. Not knowing the qualifiers that go with it. Oh, you didn't see the red alert. Why did you go so heavy, right? So we try to teach that risk management part first, right? Don't keep a runner. Normally, in a mode like this, I try to keep a runner somewhere. Now in futures, I get in, get out. My runner is I have SPY calls for September 15th. That's my runner. These day-to-day gains are just hedging premium loss from data. I'm betting that we rally into monthly expiration or at some point. They're not that aggressive. They're 466 calls. So essentially I'm looking for us to at least retrace half the mean between now and monthly expiration. I get 5 weeks from now before they expire. So normally if I do keep a runner, what I'll do is on a futures trade, if I'm convinced it's going to rally, like a bull long up that hits a target, I will keep a runner. And it's the same thing as going from green light to yellow light to red light. The first thing I do, if I hit my first target, I'll close half. If I hit my second target, I'll close the other 30%. So if I had 10, or if I have 10, like if it's a bull long up and we trade and hit DD band, and I'm like, maybe it's going to break and keep going. Normally I'll trade most, if not all of it, or take profit on most or all of it. So at minimum, I take more than half. So if I had 10, I'll take at least more than 5. 6 off for profit, keep 4 on. If I hit my next runner, I'll close 2 or 3 more and I'll keep like 1 to go. But in reality, I've learned over the years that unless those are rare days, few and far between, unless you are very, very, very confident in day trading, the goal is to get a risk and reward that you plan and take it and go. If you hold a runner for the entirety of the day, here's what it makes you do. For a very small possible profit, you're trading all day. And I've learned over the years that the way to make money trading is to trade as little as possible. If I can do this every day, 1.5 to 1, make 400 bucks if I'm right, lose 150 bucks if I'm wrong, I'm not doing anything wrong as far as a formulaic approach to trying to make a living as a trader. If I'm trying to trade all day, I perceive that as gambling. When I was younger, I used to do it. I used to love keeping a couple runners, but you know what I like to do for the last 2 or 3 hours of, or last actually 5 hours of the market day, is not be in a position where a random snap finger catalyst can shoot against me, or sit there and stare at the market all day. It's kind of like when you're down to your last $5 at the casino, are you going to stand there and hover over the tables like, should I play this? Should I whatever? Just go home, right? For your emotional well-being and resetting, it's good to get in and get out and get away and just kind of walk away. So runners, to me, require extreme amounts of confidence. Like everything holds up. We call it the golden setup. DD bullish, resilience greater than 0, no irrational signals. Bull long up, bounce up hedge pressure. I jumped in heavy. We trade all the way to DD band. I mean, it's like those perfect setups. I'll hold that runner to do it, but I know I'm committed all day, and I personally like to just take my profit and walk away. Trade less, be more profitable. Yeah, the less you do, the better. And the best moves are always in the first hour and a half of the day, at least the most predictable ones, like the one I did today. From here, it's pretty random what happens. So in reality, if you do hold a runner, it's very easy how to do it. You just make sure you have a target in mind. So what is our target for the S&P? Well, we don't really have one right now. There's nothing up here. Are there any gap fills to come by? Let's go by and see if there are any. There's just one. Right there. So there's no gap fill in the way. And so the exit target's calling, which is module 3. Help you find, okay, where's my exit target? Is there one in the vicinity? Well, SPY's I can hit 456 today. We're not going to run 100 points. That's going to be very odd. So upper targets here, I don't really have one. Let me go to the top left on my screen here. Oh, well, upper target. Okay, what if I held a runner to fill DD band? Okay. Then it's risk and reward from here. Once I got my first place to take profit, I'm going to hold a runner. 44.86 to 45.15. That's my next target. 30 points. So I set a stop loss arbitrarily. It's usually I have a 1 point stop rule off of hedge pressures and other pivots on entry rules. So an entry rule is resilience. Use that hedge pressure, get on that bull and bear zones. One strike stop off of entry rules, yes. Now here, what am I going to do at the bull zone? I've got a 30 point possible rip, and say I want to hold a runner on the S&P for those 30 points. Okay, so this is a bull long up, and let me look at the liquidity map. See how liquidity map on bull long up doesn't have an entry on bull zone? So therefore, I don't have that one strike rule. I need to set a rule for my stop loss. One strike is the minimum. So if I'm going to get 30 points on a run, then I arbitrarily set a stop loss to make it at least 1.5 to 1, maybe 2 to 1. So in this particular case, I might, for 30 points, allow myself 15 points of stop from here. You follow? So again, as long as you have a risk and reward plan, and your stop loss is at least 1 strike or bigger, and 1 strike in the S&P SPY, for instance, is 1 point. Then as long as it's, and Garrett has mentioned a red line, 44, 45.05. Oh, you know what? Good call. So if I were to be in a small trade from here to DD band, it's 30 point run. I'll give myself 15 points to play or hold. Like that. Okay, cool. All right, guys, I have to get ready because I have 10 minutes until I have to jump on this podcast. I'll post the link in Discord so y'all can watch it live. I love you. Thanks for tuning in. It's a short one, I know. Well, we'll see y'all later today for a Zoom call. Thanks for checking out. We're going to look into that monthly maps bug and try to get that fixed today. Other than that, we love you guys. Futures should be launched for everybody. Your connections tab should show futures. If it doesn't show futures, send me a message. Everybody should have the ability to see it if you're Pro Plus. If you're Pro, it'll be grayed out. So we're excited. Futures is fully launched to everybody now. We're working on getting the DD bands automated. That's the current project we're working on in the middle of bug fixes. So we're glad to release that next automation. The new alerts coming out probably in a week or two. We should be able to play with that on the test server. So I'm excited. Love you guys. We'll see you later.